So at the beginning of the year, had a little bit of a rough start, and then we had some positive returns. But when I'm meeting with clients, it seems as if they almost don't realize that stocks actually increased in value in the second quarter. Can you talk a little bit about why we have positive returns, yet more of a negative sentiment as far as investors go?
Yeah, and I think a lot of people are feeling that way. So the quarter got off actually to a pretty good start and finished fairly strongly. So the stocks were up, but there were some headwinds and some tailwinds that kind of mixed to cause feelings of a little bit unsettling, and people really didn't appreciate what we got. So on the positive side of things, earnings were great. Small cap, mid cap, large cap stocks all posted more than 20% earnings growth in the first quarter. And the nice part is it wasn't just from tax cuts. A lot of it was top line growth. So earnings expectations are going to continue to grow throughout the year. Another 20% expected this quarter and high teens for next quarter. So earnings look fantastic from that standpoint. The economy is doing well. The unemployment rate hit an 18-year low, 3.8%. There's actually more people, there's more open jobs than there are people looking for jobs. That's the first time that's happened in history. So the unemployment rate is going to stay low. People feel good. Wages are going to pick up. So there's a lot of positives in the economy. Manufacturing, services, small business, consumer sentiment. A lot of people feel really good, but there's a but. We had inflation pick up in the quarter, and inflation usually dampens down returns. We had the Fed raise rates a second time, and now they're talking about 2 more rate hikes. So earlier in the year, it was 2 to 3, now it's 4. So monetary policy is tightening, which can, again, put a little damper on stocks. We had some volatility, and it was kind of a strange volatility. We had about as many up days as we did down days. So we didn't really have a lot of positive momentum. We kind of had an up and down market. So that caused a little bit of that feeling of uneasiness. And then lastly, tariffs. Roughly $100 billion in tariffs have been implemented or will be implemented. And that had a negative impact. So you put all these things together. Stocks actually, the S&P was up 3.4%, but it was kind of a strange feeling in the overall market. Yet at the same time, it wasn't defensive. Small caps were the top performers. Small cap value up 8, small cap growth up 7. So small caps are a more aggressive asset class, and they actually performed quite well. And it was really the defensives and the areas of the market that were most impacted by tariffs that underperformed, whereas technology, again, performed well, energy performed well. So all in all, a pretty good quarter. If you annualize it, you're looking at double digits, but it just felt strange because we had some headwinds and some headlines that kind of detracted from maybe some of the positive sentiment.
Thanks, Darren. And thank you for joining us.